You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer. Hi there, it's Victor here once again from foreshowmarkets.com. In today's video, I will be sharing with you the principles of technical analysis. Okay, the principles of technical analysis. Of course, we're just starting introduction to market analysis. In one of the previous videos, I did a basic introduction to market analysis. I did the overview of what we're going to be going into in the whole of market analysis, and then I told you that we're going to break it down into bits and pieces. Okay, so you already know that the market analysis is divided into two: fundamental analysis and technical analysis. So today we're going to be starting technical analysis. All right, we're going to be starting technical analysis. So principles of technical analysis is what we're going to be doing today. The principles of technical analysis is universal. Okay, the principles are universal. The principles are widely accepted, and that is why they are called principles. Okay, now principle number one, I tell you what, the market is so easy to trade and make money from if only you understand the principles of technical analysis. All right, I've made millions of naira, okay, tens of thousands of dollars, okay, from the FX market, from the stock market, from the cryptocurrency market, just by applying these simple principles, okay, to my trading and my investment strategies. Okay, they work and they always work, provided you know how to carry out proper analysis. Okay, so principle number one: all markets move in cycles. So I'm going to lump the first two together as one. Okay, all markets move in trends, all markets move in cycles. Okay, let's clear this. All markets move in cycles. Okay, all markets move in cycles. Okay, cycles are made up of uptrend, downtrend, and sideways market. Okay, and sideways market. Okay, that's what makes up cycles. Now, what does it mean by all markets move in cycles? It simply means that the market cannot keep going up, right? God, market cannot keep just going up forever. It's not possible. Okay, it's not possible, and this is one of the traps that newbies and inexperienced traders and investors fall into. Okay, you saw Bitcoin moving from 3,000 USD. Okay, you saw it moving from 3,000 USD to 20,000 USD, and you were still buying. Okay, if you were still buying at 15,000, 20,000, you were just not a smart technical analyst. Okay, you were just an inexperienced, or you just didn't know what technical analysis was. Okay, if you knew what technical analysis was, then you would have been wise. Okay, so at that time I was telling my friends, you know what, this cryptocurrency market is just like every other market. It's like the Nigerian stock market, it's like the US stock market, it's like the forex that we trade, it's like trading gold, it's like trading crude oil. The price can never just keep going up and up and up and up forever. Okay, but people thought it was, yeah, well, this is another opportunity to just cash out and unlimited. Okay, and then I told them, you know what, don't sell your Bitcoin, the price is too high. And they say, no, it's going up, you know. And of course, after a few weeks, bam, it crashed down to around 4,000 USD within a few weeks. Okay, it's very simple. So the principle principle number one, all markets move in cycles. The market cannot just keep going up in a straight line. Okay, so you need to know it's all about right timing. Okay, right timing. Okay, and your right timing means timing of entry and timing of exit. Okay, there's a time to buy, there's a time to sell, there's a time to wait, there's a time to stay away from the market and watch. Okay, there's a time to buy, there's a time to sell, there's a time to wait and watch. Okay, so principle number one, all markets move in cycles. So smart investors always wait for a pullback to buy again. Okay, smart investors always wait for a pullback to buy again. Okay, so they wait for a pullback, okay, and they say that it's cheap again, then they buy again, and possible for a new all-time high. Okay, so Bitcoin went maybe 3,000, 20,000, and then came down to about, it was around 6,000. It came down to 6,000 before going up maybe to around 12,000, 13,000 thereabout. Okay, so we are still expecting this to happen, to make an all-time high, say maybe 30 USD. This is how smart investors trade. Okay, smart investors, smart traders understand that when a currency pair or an asset class is too expensive, then you need to wait for a pullback, you know, to buy cheaper. And this is all about the psychology of the market. Okay, inexperienced traders buy here. Okay, inexperienced traders sell here. Okay, and so you want to ensure that you do not fall into this trap. Okay, it's very, very attractive when the market is going up. You know, there's what you call FOMO, fear of missing out. FOMO, fear of missing out. And a lot of times it looks like it's going up, it's going up, it's going up, it's going up. I don't want to miss out. And then you buy at a high price, and before you know it, you are in a big loss that, who knows, you may never recover from. Okay, so that is principle number one. All markets move in cycles. Cycles equals to uptrend, downtrend, and sideways market. Okay, let's go to principle number two. Principle number two, all information is reflected on the chart or price. Okay, all information is reflected on the chart or price. Okay, all info is reflected on the chart or price. Okay, this is the core belief of technical analysis. That is why most core technical analysts will tell you they don't do fundamental analysis. They don't listen to news. They don't trade with the news, because they believe, this is the opinion of technical analysts, their belief is that everything I need to trade, I can see it on the chart. And so if there's any news coming out, I will see the effect on my chart, and I will take action based on what I see on the chart. Okay, so all information is reflected on the chart. This is the principle of second principle of technical analysis applied by technical analysts. Okay, so the information I can see right here from this chart is that the euro dollar is in an uptrend. Okay, and then we are currently experiencing what looks like a correction. This is a uptrend. Then we're seeing something like a correction. Now this correction might now be turning into a reversal of the trend for us to see a possible down move, okay, back to the lows here. So everything you need to do to make this trade on euro dollar is on this chart, and that is what we're going to be teaching you in technical analysis. Okay, principle number 3, history tends to repeat itself. Awesome. History tends to repeat itself. Principle number 3, history tends to repeat itself. Okay, history repeats itself. Okay, so let's look at this a bit. So it simply means that everything you need to trade, I'm talking about all info is reflected on the chart. Everything you need to trade is on your chart. Okay, so how am I going? Well, basically means that technical analysis will teach you how to make sense of all of this confusion and make. Okay, principle number 1. This is principle number 1. All market moves in cycles. Principle number 2. All info is reflected on the charts. Principle number 3, history repeats itself. Okay, history repeats itself. Now, this is one of the amazing concepts I have used to make so much money from cryptocurrency, from stock market, and from forex market. History always repeats itself. Okay, so if Bitcoin went from 3,000, so this is Bitcoin. Okay, so if Bitcoin went from 3,000 to, okay, no, I need to change this. If Bitcoin went from 3,000 to 20,000, okay, and came back to 6,000, okay, came back to 6,000, or let's say it came back to 3,000. It came back to 3,000, okay, and so let's say this has been happening in the past. So it first of all came from 3,000, went to 20,000, came back to 3,000 here, then went back to 20,000. What do you think will happen when it comes back to 3,000 again? Okay, the principle is that history tends to repeat itself, and so as a technical analysis, you should expect that this price should go back. As a technical analyst, you should expect that this price should go back to 20,000. Okay, this is what it simply means by history tends to repeat itself. I have used this principle, so many times to make so much money in the financial markets, cutting across forex, stocks, and cryptocurrency. Okay, so I will be doing further videos to share my story, okay, of how I applied these principles in diverse ways, in different ways, to make money from the financial markets. Okay, and of course, all of these principles is what we'll be teaching you in technical analysis. Okay, so this is just sharing with you the principles that we are going to apply as we go into the different aspects or elements of technical analysis. All right, so I hope you learned something new in this video. If you learned something new in this video, give us a thumbs up. If you are watching a video for the first time, please click the subscribe button, okay, and click the bell to the right of the subscribe button. Click all notification so that you get notified whenever we upload a new video. Why do you need to subscribe? Because you're getting loads of free training courses on this channel. What I'm giving out on this channel is worth over $1,000 if someone is to take you on training. Okay, so I'll see you in the next video. Have a wonderful trading day. The last thing I want to leave you with is never ever neglect the principles of technical analysis. in your trading. All right, I'll see you in the next video. Cheers.